Well, it's 2019. Can you believe that? And I hope 2019 brings lots of happiness to all of us, especially in the investing world. As you're aware, this is your update for the end of the year or the last quarter of 2018. 2018 turned out to be a really rough year. Both the stock market and the bond market had losses for the year. Gold even lost for the year. So, very difficult year. But it's similar actually to previous years like 2015. When this occurred then, 2016 turned out to be a very good year. And I expect the same for 2019, and I'm going to explain why. What ended up happening in 2018, I sent an email out to all of you in August explaining that about 6 stocks were responsible for about 20%, 25% of the actual performance of the S&P 500. Market was very discombobulated last year, and when I saw that, I actually pointed out that I felt we were going to get a pretty good correction as a result. We ended up getting that, but I didn't want to take any action or make any moves. I think that's the wrong way to handle those things. So let me explain some things to you. One, when we got into this particular correction that happened in the last quarter, it was the machines, the algorithmic trading machines, that caused most of our grief. Those machines only understand statistics. And I've been given a statistic, for example, when you're at a football analogy, if you have 4th and 1 at the 50-yard line, statistically, that says to punt the football. And that's all an algorithm can do. But the Philadelphia Eagles did it last year and won the Super Bowl because they went for it. And they got the first down, they went on to win the Super Bowl. Sometimes algorithmic trading programs are just a disaster, and they cause this deep, deep drop. Some people are calling this a bear market. It is not a bear market. It's just a term that the journalists like to use. A bear market occurs in a recession, and we don't have any sign of a recession anywhere in our future. Essentially, what's happening is you're seeing a slowdown worldwide, and everybody's expecting that slowdown to hit the U.S. Well, let me explain why that's probably not the case and why I'm very confident about going forward into 2019. Whether you like Donald Trump or not, our president has changed the landscape of the world. And basically what he has done is we've been subsidizing the entire world through the fact that they charge tariffs on our goods going in to their nations in Europe and Canada, Mexico, China. We don't charge much in the way, we do charge tariffs, but nowhere near the level that they do. Very unfair. Now, he's changed that landscape by turning around and he's got Mexico and Canada and Europe all in agreement. They've all lowered tariffs, which basically allows us to start sending more and more of our goods overseas. But the biggest issue was that tax code change that we got. Essentially, we went to a 21% corporate rate from a 35% corporate rate. We were subsidizing the rest of the world because the rest of the world had a lower corporate rate. Companies were moving out of the U.S., building plants out of the U.S., and establishing their domicile out of the U.S. to pay less taxes. Well, when we changed the tax code, we put ourselves in a position where now businesses are coming to the United States. So yeah, you're going to see a slowdown in Europe and China and other countries around the world because we're not subsidizing them anymore. And you're going to see an actual increase in the U.S. because all that business is coming here. A 21% rate compared to where we were is very attractive. And if you compare where we were, Canada was a little bit lower than we were. So if you were in Michigan, you could domicile in Ontario, and it was cheaper to do that. So I believe that along with many other reasons, I mean, we have low unemployment. We just had the best Christmas season we've had in 6 years. The numbers have been phenomenal, and I really feel that that's going to be this. Look, I'm not saying we're going to get a V and the market's going to go straight back up, but I do believe that we will have volatility, but we're going to go up. I believe by the end of 2019, it will catch up, and we will have a double-digit return by the end of this year. Now, I don't like to make predictions. Usually these are just, they're basically a update to you about what happened in the previous quarter. We all know what happened the previous quarter. Nobody liked their account statement. But you know what that is? That is the emotional price we pay in order to have the opportunity to become wealthy through investing. That's what we're trying to accomplish. we're trying to accomplish being successful and having a good rate of return. Well, markets don't just go up. They go up and they go down. And sometimes you just have to accept that that's what happens with any sort of investment. So at the end of the day, I'm very optimistic about what we should see in 2019. Now, that can change. Something changes dramatically, a war or a black herring event like a nuclear explosion or something, that's going to change things. But if nothing like that changes, I think that the Fed got too quick with their rate increases, and I think they're going to slow that down in 2019. And I think that will be a catalyst. So I hope you had a happy new year. I look forward to speaking to you again at the end of the first quarter, and let's see what happens after the first quarter. But I feel fairly confident that you'll like the results this year. Basically, just let time heal all wounds. All right, talk to you at the end of the quarter.